Good morning, this is Bloomberg Daybreak Europe. I'm Lizzie Burden in London, and these are the stories that set your agenda. Global markets in wait-and-see mode ahead of the US Payrolls report later today, and after President Trump announces a trade deal with Vietnam. UK Prime Minister Keir Starmer belatedly backs his Chancellor after her tearful appearance in Parliament sparks a sell-off, and another late night for Congress as President Trump's tax bill gets hit by Republican resistance, this time in the House. A very good morning. I lied. I'm not in London. I'm actually in Dubai, but it's still a very good morning to you. Welcome to Daybreak Europe. And if we just check in on these markets this morning, you're looking at futures pointing higher on both sides of the Atlantic after stocks kind of found their footing yesterday in this second half of the year, boosted by big tech, also boosted by the trade optimism on the US-Vietnam tariff deal. And then if we flip over to your bond space, because we really had the action here yesterday, the long end yields up in this sell-off that started in the UK on the uncertainty around UK Chancellor Reeves' future, but then it infected the global space, especially for developed market bonds around the world, including treasuries, and you're looking at the 10-year yield now at 4.26%. The front end, though, remains focused on Fed cuts, and now we look ahead to the US jobs report later on. Gold easing after a three-day gain into the data, so now at $3,350 a troy ounce. Brent there at $68 a barrel. We surged 3% yesterday on the Vietnam deal, but these are light volumes ahead of the holiday, of course. And then we look at euro-dollar at a 117 handle, with the dollar on the flip side still hovering around three-year lows. But let's check in on how Asian markets are faring. Avril Hong's on standby for us in Singapore. Hey, Avril.
Hey, Lizzie. We're seeing Asia stocks. It's a mixed bag. There is some optimism given how the US has eased chip design curbs to China. It is also this idea of a Vietnam trade deal with the tariff level at 20%, much lower than the 46% that was initially threatened. So some optimism there. That being said, it's still higher than the 10% baseline tariff. So concerns about what this could mean for future trade deals with other partners, including Japan. Note as well, there's a 40% transshipment tax of sorts. So how might China respond amid all this? So cautious optimism in the markets. The Hang Seng is underperforming. We also got data today which showed, based on a private survey, that Chinese services activity weakened to a 9-month low. Now, flip the board. The other thing we've been watching out of Asia today had been the Japanese 30-year bond auction. Remember, a couple months back, the 20-year showing was disastrous, and that rippled through global debt markets. And since then, Japanese policymakers, they've been taking great pains to help quell investor concerns, including reducing issuance on the long end and slowing their pullback from the debt markets. The efforts seem to have paid off. If you take a look at the demand gauge or the bid to cover ratio on the 30-year auction, it was higher than the 30 or the 12-month average. Now, that doesn't mean that Japan long-end bonds are quite out of the woods just yet, because we have an election coming up later this month, and the government fundraising is likely to remain in focus. There have already been a lot of pledges for spending. Keep in mind as well the long-end pressures, given what we're seeing in gilt and the US jobs report to come. So we're actually seeing Japanese JGBs, the 30-year, extending losses from earlier on in the session. Lizzie.
All right. Avril, thank you so much for that great work. We are going to just as well dive into that trade story that Avril was mentioning. President Trump saying that the US has reached a trade deal with Vietnam, giving zero tariff access to American companies, but slapping a 20% tariff on all Vietnamese exports. Hanoi, by the way, hasn't confirmed the framework deal, which would be the third reached before the July 9th deadline. But let's get more now with our Bloomberg News Desk editor, Jill Desis. Jill, we've got the speed. Does it match? Does the substance match the speed?
Well, Lizzie, I think at this point we're really just kind of left trying to learn what exactly is that substance. I mean, as Averill was just outlining there, we've got those top line figures, the fact that, U.S. goods coming into Vietnam would face 0 tariffs. You've also got that 20% across the board tariff slapped on Vietnamese goods coming into the United States. Obviously, there's a 10% increase from the global tariff, but certainly a reduction from that 46% tariff that Trump initially announced when, he held his big Liberation Day back in April. And then the other component of this, I think really the only one that we can really even chew on a little bit is that idea of this 40% reciprocal, this 40% tariff on transshipping through Vietnam. So, I mean, a lot of that may be, kind of on the U.S.'s part to try to address, any concerns that they have about Chinese manufacturing components that then make their way into Vietnam, maybe for a final assembly step or such before they move on to the United States. I think still a lot of questions about what it ultimately means to enforce a transshipment tariff like that. But that is something that I think is really, interesting just because that is the component of this that, makes you wonder, how is China going to respond to this? Is there going to be any kind of retaliation from Beijing's part when they're looking at this kind of deal? But again, I think without that official confirmation from Hanoi, without more details, it's really difficult to tell. I will just say, Lizzie, that, this kind of reminds me of the U.S.-UK deal, which they initially announced, I think, at the beginning of May. It took about 5 or 6 weeks to actually get, a more fulsome framework on that particular deal. And of course, there were still many, many questions that were left unanswered, such as these, big steel tariffs. And so, I mean, what we've gotten so far today, maybe, sort of an initial announcement here, but obviously still waiting for more. And then I think just as with a lot of the other types of agreements that Trump has announced, this could have a really long tail in terms of how developments work.
Yeah, even now, big questions remain on that UK-US deal. We do wonder whether other nations kind of don't want to go first, which is not what Donald Trump would like. But, Averill was mentioning earlier about the Japanese impact. Japan's automakers have been absorbing Trump's tariffs, but I wonder how this implicates the US-Japan negotiations, Jill.
Yes, Lizzie, I think this is a really good question, particularly because, Japan has obviously been working incredibly hard to reach a deal with the United States. Their chief trade negotiator has done 7 rounds of talks with Washington, trying to reach a deal to avert, as I believe they've got a 24% tariff or some such. But, at the same time, the biggest issue with Japan kind of comes down to these automaker tariffs. And, what we're looking at right now is that Japanese car makers, for the large part, have really absorbed the cost of these tariffs. If you look at Japan's 6 major automakers, that send cars to the U.S., just 3 of them have raised prices in America. It's really only Subaru that's come close to the 25% tariff imposed on imported vehicles, whereas Toyota, Mitsubishi, you're really only seeing increases of around, in the hundreds of dollars ranges, maybe, a percentage or so. So, I mean, if you're Donald Trump, you're probably looking at, what these car makers are doing and saying, well, they can clearly absorb the cost of tariffs, so maybe I don't actually have to lift, these tariffs on these automakers. So I do think that that's something that, obviously works against Japan a little bit. I think a lot of unanswered questions there. And I think, just bringing it back to that, UK example again, also kind of reflects this idea of if you're Japan trying to remove reciprocal tariffs, some of your biggest concerns are actually around a lot of these sectoral tariffs that are affecting, again, your automakers and others. And, those are quite separate from the big Liberation Day reciprocal tariffs that Trump announced. You're looking at these sectoral tariffs on things like cars and steel and such, that have been implemented under U.S. Commerce Department rules. It's a little bit of a different beast. And I think if you're countries that, if you're a country like Japan, India, so on and so forth, that are trying to resolve some kind of a trade deal by that July 9th deadline that Trump has imposed, you still have to kind of contend with how exactly you negotiate something there, while also keeping in mind that there could be other tariffs that sort of pop up down the line from the United States.
OK, Bloomberg's Jill Desis, excellent reporting. We thank you so much for that update on trade. Now let's turn to the fiscal. The UK Prime Minister Keir Starmer has said that his Chancellor Rachel Reeves will stay on in post. He reaffirmed her position after speculation about her future sparked a bond sell-off yesterday. You saw not just gilts, but UK stocks and sterling selling off, and it even sparked a global repercussion. You saw it in the Treasury market, you saw it in Canadian and German in bonds as well. But before we dive into the politics of all of this, let's just go to our markets reporter, Valerie Teitel, to put it into context for us. Val, this wasn't quite a Liz Truss moment, was it? Drama, but not a crisis.
Look, turmoil in the gilt market is still something that the government does not want to see. This was all sparked by the almost non-committal answer from Keir Starmer about backing his Chancellor. And then that Chancellor, Rachel Reeves, she appeared emotional in Parliament. That really sparked speculation. There could be a big U-turn on these fiscal rules, especially as they need to plug this $5 billion gap. That led the gilt market to really decline in price. Yields skyrocket, especially in the long end, as the market is just assuming this is going to be coming along with more and more issuance from the UK government. Remember, gilt issuance is already near a record, so this is just adding pressure onto the gilt market in order to absorb this extra debt issuance. But besides the UK, we do have to also focus on the biggest risk event of the week coming later today at 1:30 p.m. It's non-farm payrolls. The estimate for the non-farm payrolls has dropped. We're now at 106K. That's because yesterday we saw a big miss in ADP employment. With expansion of 98K was expected. We actually got a contraction of 33K. So that's led a lot of market nervousness ahead of this print today. We also are expecting the unemployment rate to tick up to 4.3%. All this being said, Lizzie, the equity market really read through any of these headwinds yesterday. We notched another record for the S&P 500, led by a bounce back in tech stocks yesterday.
All right, Bloomberg's Valerie Teitel ending on a positive for us, as always. We thank you. And I just want to dive into the politics as well. Joining me now is Rosa Prince, UK politics and policy columnist for Bloomberg Opinion. Rosa, when we look at the market reaction, it seems that what bond traders are assuming is that anyone who could potentially replace Rachel Reeves is going to be fiscally looser, that they're going to borrow more. Who are the runners and riders that you've got in mind?
Well, there aren't really that many, as you say, who would do things radically different from Rachel Reeves. Some names that get tossed around are sort of the safe pair of hands of Pat McFadden would be an option. Yvette Cooper, the Home Secretary, she's been in the Treasury before some years ago, so she's a possibility. Then there's Jonathan Reynolds, the Business Secretary, who's thought of as doing well. I can see you've got on the screen Darren Jones, who is currently Rachel Reeves' number 2. My own guess is that at this point, Keir Starmer will not move Rachel Reeves, even after those extraordinary scenes yesterday in the House of Commons, and they really were extraordinary. I think that he's so tied into his own project that it would actually backfire and harm him if he did sort of make her carry the can for what has been a disastrous week with this failure to reform welfare.
I mean, Rosa, you were in the chamber yesterday. You watched those dramatic scenes. It has to be said that the Treasury has said that the reason Rachel Reeves was crying was because of personal reasons. We should make that point. But what was the atmosphere in the chamber? And what are her options going forward? Because she's got to keep the party happy, but she doesn't seem to have many cards to play here.
Yeah, it really was quite a thing to watch it yesterday from the press seats high above the House of Commons. The person I was sitting next to said to me, "Is Rachel Reeves crying?" And I honestly, I didn't believe my eyes. I couldn't believe it. Now, as you say, fairly quickly, the Treasury came out and said that this was due to a personal matter. There were also reports that she'd had some kind of conflict with the Speaker of the House of Commons on her way into the chamber. I obviously don't want to deny what they're saying. It does seem that if your actions are such as the markets are being moved and it has caused such a stir in both the worlds of finance and politics, then you have to come up with something other than that. I think there would need to be a fuller explanation of what was really wrong, because we are left with the impression that she was just very emotional and distressed about what had been some quite bruising questions from Kemi Badenoch, the leader of the opposition, saying, is she safe in her job? His failure to stand by her and say emphatically at that point that she was safe in her job. What are her options going forward? Well, I think for the time being, she's probably going to just want to survive through to the summer and take a bit of a break and take a breath. And then we go again in the autumn when she's going to have to find some quite bruising either public spending cuts, which so far she's been unable to deliver, or tax rises in that budget that's coming down the track.
Well, clearly she's got a political headache right now, but it seems that the market is behind her, at least from that gilt sell-off. Bloomberg opinion columnist Rosa Prince, thank you so much for bringing us the latest on UK politics. Let me take you through what else is on the docket for today. It's a busy day in terms of the economics. Of course, at 7:30 a.m. London time, we get Swiss CPI. At 8:15 London time, it's the Spanish PMI data, the preliminary reading, of course, for June. A tick down expected at the services and composite levels, but still in growth territory. And then it's the highlight of the day. At 1:30 p.m. London time, we get the US jobs report. Then at 4 p.m, we get the Atlanta Fed President Raphael Bostic speaking. Last week, he was saying that price rises linked to tariffs might be incremental, dare I use the T word, transitory, rather than a one-time bump. And that could result in more persistent upward inflation pressure. But we'll keep an eye on all of that. The jobs report, of course, in full focus. We'll have full coverage for you right here on Bloomberg TV. Weakness expected, but could there really be enough to persuade the Fed to cut in July? For a roundup of those top stories you need to know to get your day going, do check out our Daybreak newsletter. Terminal subscribers can find it by going to DAYB Go. Coming up on the programme, though, the very latest as President Trump's budget bill struggles with holdouts in the House of Representatives. That's next. This is Bloomberg.
It's Jobs Day, and Bloomberg has the report under surveillance.
There is this feeling that the labor market is contracting.
There's some risk that layoffs are growing.
Medium-term outlook is the economy should be fine.
Today, Jonathan, Lisa, Anne-Marie, and Mike will bring you crucial data and expert analysis at terminal speed.
The weakening trend continues.
This is a trend. We're seeing declines.
If you're not with a job right now, it's harder to find a new one.
The June jobs report, today on Bloomberg.
Welcome back to Bloomberg Daybreak Europe. To tax now, late night drama on Capitol Hill as President Trump's signature tax and spend bill stalled in the House of Representatives. After a razor-thin Senate vote, Republican leaders have been working really hard to convince skeptical holdouts to send the bill to Trump's desk by his July 4th deadline. Bloomberg's Bill Ferries has been keeping across events for us. He joins us now from Singapore. Bill, right now, how do things stand?
Right now, if you take a look at what's happening on the floor of House of Representatives, you'll see the vote is basically static at about, I think it's 217 to 207, with 8 Republicans not having voted. It's been that way for essentially 4 hours now, and it's going to stay that way until the leadership in the House, Speaker Mike Johnson, feels like he has enough votes to get this over the line. Now, this is not the vote on the actual legislation. This is essentially a vote agreeing to have the vote. It's a vote setting out the terms of the final vote. So even if they can get over this hurdle, then they have to go into a process where they have the vote. And both sides will have probably a couple hours of debate. So we could be quite a ways away. But right now, there are a significant number of holdouts on this legislation. Some Republicans, or most Republicans, believe eventually it will pass. But there is a lot of frustration, a lot of probably horse trading going on behind the scenes to win over some of those final holdouts.
So there are procedural obstacles, Bill, but in terms of the policy obstacles, what are they to the bill's progress?
Well, I think the big thing for a lot of definitely the members who are still holding out, and even some who may have agreed to go along with this, is the cost of the legislation. This bill, which was changed in the Senate, is forecast to cost $3.3 trillion over the coming decade. That's more than $500 billion over the legislation that really barely passed the House. So you have a lot of conservative members of the Republican Party grumbling about the cost of this legislation. Now, there are provisions about cuts to the Medicaid health insurance. There are provisions about cuts to renewable energy tax credits and things like that. That are also a source of frustration. But the big picture here is $3.3 trillion, $500 billion more than what the House barely passed a few weeks ago. Remember, just like in the Senate, Republicans can only afford to lose 3 votes in the House to have this pass. And unlike the Senate, if this ends in a tie, the legislation fails. There is no tiebreaker. J.D. Vance cannot show up and cast a tie-breaking vote like he did in the Senate. So that's why Republican leaders are holding this vote open until they believe they have at least the majority they need +1 to get it over the line.
So is there actually a chance, Bill, that this all falls apart and Trump doesn't meet his July 4th deadline?
Well, there's definitely a chance that he doesn't meet the July 4th deadline. If they cannot do enough arm twisting tonight to have the vote, and it looks like it may fail, they can definitely regroup and try again. But obviously that will delay the process. July 4th, Friday in the States. It's hard to know if they would really be able to have a second vote, win over the holdouts to get it on his desk by then. The July 4th deadline is really artificial. It's something President Trump wants, but there's no legislative reason to have it. And you even had Republican members a week ago saying, listen, if it gets there a couple days later, that's fine. But I do think it would be a political blow to Trump not to get it. We've seen him tweeting. He is still awake and tweeting out about how he thinks this vote just needs to be taken and concluded and have the House move on.
I wonder how many rounds of golf he can fit in before that deadline. Bill Ferries, we thank you so much for your analysis. Crucial Context, our senior editor, Bill Ferries. Coming up on the programme, Tesla sales fall, but the stock rallies after relief that it could have been worse. Details next. This is Bloomberg. Welcome back to Bloomberg Daybreak Europe. Let's get you our latest tech news now. Tesla shares jumped after the car maker posted a less drastic decline in vehicle sales than the most pessimistic analysts had feared. The company delivered just over 384,000 vehicles during the last 3 months, down from 13% from a year earlier. Well, that leaves Tesla in a difficult place to avoid another annual drop. Some investors had been braced for a plunge in sales of more than 20%. And elsewhere, Chinese EV giant BYD is pausing plans for a major plant in Mexico, citing global trade uncertainty. The company says it still aims to expand its production footprint, but wants to wait for more clarity before making a decision. BYD recently opened its first factory outside Asia in Brazil, which will be capable of producing 150,000 cars annually. And in a major blow to Apple's global supply chain strategy, Bloomberg has learned that Foxconn is pulling hundreds of Chinese engineers and technicians out of its factories in India. Sources say that over 300 Chinese workers have left and mostly support staff from Taiwan remain in India. It's not immediately clear why Apple's biggest iPhone app assembler had sent the workers home. And OpenAI has agreed to rent a massive amount of computing power from Oracle as part of its Stargate initiative. Sources say that the rental will total about 4.5 gigawatts of data center power in the US. Oracle is also said to be developing multiple data centers across America to meet the additional demand from OpenAI. Those are your latest stories in tech. Just the latest on geopolitics as well. The Pentagon says that US airstrikes on Iran have set the country's nuclear program back by 1 to 2 years. A spokesman echoed President Trump's claim that facilities hit by US bombs had been, quote, completely obliterated based on intelligence assessments. He also said that the strikes degraded Iran's physical capability for constructing a bomb. Well, those are some of your top stories this morning. Coming up on the programme, we're going to bring you the latest on US-China trade as the Trump administration lifts some chip design export curbs. That's next. This is Bloomberg. Good morning. This is Bloomberg Daybreak Europe. I'm Lizzie Burden, and these are the stories that set your agenda. Global markets in wait-and-see mode ahead of the US payrolls data later, and after President Trump announces a trade deal with Vietnam. UK Prime Minister Keir Starmer belatedly backs his Chancellor after her tearful appearance in Parliament sparks a sell-off. Plus, another late night for Congress as President Trump's tax bill gets hit by Republican resistance, this time in the House. A very good morning. If you're just joining us, it is 6:30 a.m. in London. And if we look in your futures picture, futures pointing higher on both sides of the Atlantic. Just FTSE 100 futures showing a little more enthusiasm this morning. And stocks really found their footing in the second half yesterday. The S&P hitting another record powered by big tech and the trade optimism on the back of that US-Vietnam tariff deal. But it was a very different picture in stocks from what we saw in bonds. Flip the board over to the cross-asset picture and you can see long-end yields were up yesterday in this sell-off that started in the UK on the uncertainty around the Chancellor's position. And that infected markets around the world, including treasuries. The 10-year yield now at 4.26%. That's the long end. The short end of the curve, though, much more focused on Fed cuts. And now we look ahead to the US jobs data later on today. Gold we have there at $3,351 a troy ounce, easing now after a 3-day gain into the jobs data. Oil just shy of $69 a barrel after a 3% surge yesterday on that Vietnam deal. But I would point out these are light volumes ahead of the holiday tomorrow. And then we have euro dollar at a 117 handle, so the dollar still hovering around 3-year lows. But let's dive into the trade story now. The Trump administration has lifted at least some export license requirements for chip design software sales in China. 3 industry leaders, including Germany's Siemens, say that the US Commerce Department has told them that government licenses for businesses in China are no longer required. So let's get more now with Bloomberg Tech Asia co-anchor Annabelle Drulers. Belle, thanks for coming back on. Just talk us through the significance of this backflip.
Yeah, well, it really has been a backflip, like you say, in about term, because it was only at the end of May that Washington was telling chip design software companies not to send their technology to mainland China. So it's only just barely been the process of several weeks, but it is a sign that there is that sort of detente that we've seen, these deals between Beijing and Washington are moving forward. So this move to lift these curbs on this technology, allowing these chip design software firms to, again, restart their sales to mainland China, is a sign that the deal that was reached in London just a few days ago is being implemented, because it was sort of a promise that Washington had made to China that they would lift the restrictions as well as for ethane and jet engines to China if, as well, Beijing honoured its pledge to speed export approvals for critical minerals that are used in everything from wind turbines to airplanes. And so that is a sign, I guess, of some sort of progress. And as you said, we've already seen that the companies that are starting to, again, restart sales. So Siemens from Germany, for instance, and then Synopsys and Cadence are saying that they're also in the process of restarting their sales to China.
Yeah, I mean, we had Howard Lutnick telling us that this deal had been done, and now we've got the details. So as we look at all of this, Belle, you've got China bracing for US trade deals. Exports have soared.
Yeah, that's right. I mean, it's really that big question that you see in China, just how much front-loading there is of these shipments in anticipation of perhaps further restrictions down the track. I mean, we saw that, for instance, coming out in the PMI data just of this week, but you saw the official gauge still in contractionary territory, so below 50. But on the flip side, you saw the private reading coming in above 50, and that is the survey that tracks more of the private enterprises that are exporting abroad. I mean, there's still a lot of weakness in the Chinese economy, but there is, I guess, some sense that, again, companies are trying to get ahead of any restrictions, and they do want that trade to continue.
OK, Bloomberg's Annabelle Drulers, we thank you, co-host of Bloomberg Tech Asia. Now, returning to one of our top stories, the UK Prime Minister has told the BBC Rachel Reeves will stay on as Chancellor for many years to come. That's after a bond market sell-off yesterday over speculation about her future. Bloomberg's James Woolcock joins us now for more. Morning, James. Just tell us what exactly spooked the bond markets in such a big way yesterday.
Lizzie, I've been watching Prime Minister's Questions, the weekly head-to-head for Prime Ministers and the Leader of the Opposition, for something like 17 years now, since maybe I was 12. I have never seen anything like yesterday, where you have the Chancellor of the Exchequer, the number one sort of official in charge of the Treasury, shedding tears while sat next to the Prime Minister, answering questions, or in this case, dodging questions about her future. That was what set off the gilt markets, who now are asking questions around what is this Labour government's project, what is their fiscal mission, and what is the Prime Minister's commitment to someone, Rachel Reeves, who has been core to his economic project.
Well, we should say that the Treasury made a statement that those tears were due to a personal matter. But, James, we have to ask, where does this leave Reeves' position now?
Well, this is the thing. Starmer then gave this late interview to the BBC saying he has full confidence in the Chancellor and that she will be in position for many years to come. And like you said, Lizzie, there's potentially a personal issue involved here that we don't know about. But it is a marginally embarrassing study for a Chancellor who has made a pitch for herself as the Iron Chancellor in charge of the country's finances. And also, the question number 10 will be asking themselves this morning is, if they were to replace her, is there even a more market-friendly Chancellor available to the Labour Party? And what would it say about the changes they'd have to make to policy if they were replacing a minister? If you're going to change someone at the top of government, there normally has to be a reason. The reason for the current government seems to be that they can't get their own MPs to back their agenda when it comes to welfare and other spending cuts. That's not really a message they want to send. So the question they're all asking this morning is, what is the pathway forward? Is Rachel Reeves' career safe? And what is Keir Starmer going to say about where this government goes ahead? We are a day out from a year into this Labour government. This cannot be how they wanted to start their time in office.
All right, Bloomberg's UK politics reporter James Walcott, we thank you so much for that crucial context. But let's dive into the market reaction now to Keir Starmer's initial refusal to back Reeves. It was swift, and we can get a deeper dive now with Bloomberg's Valerie Teitel. Val, not quite a Liz Truss moment, but still a lot of drama.
A lot of drama, a lot of turmoil in the gilt market yesterday. Those 30-year yields soaring as much as 20 basis points at some point during the session. This is the gilt market saying that, basically assuming that Rachel Reeves is going to have to break her fiscal rules. There is going to be more government borrowing coming down the pike, more supply, more issuance for the gilt market to absorb. And that's why we saw this repricing higher in yields across the curve yesterday. Note this was also paired, Lizzie, by a drop in the pound. Cable at one point was down 1.2% during yesterday's session. This is the market saying this is not government spending that's going to boost growth. This is government spending to plug a hole in welfare. It's not necessarily good for the long-term trajectory of GDP for the UK. So cable is still on a back foot over the last 2 days. We're down 0.8%. But with more gilt issuance to come, the market is going to be penciling in what kind of debt interest expense the UK government will now face. It was just back last month that the OBR estimated for this current fiscal year, 8% of government outlays will be put to debt interest costs. That number is due to rise.
All right, Bloomberg's Valerie Teitel, we thank you so much as we look ahead to the gilt market open. Now, staying in Europe, the ECB's Olli Rehn has told Bloomberg that euro area inflation could stay below the 2% target for too long. The central bank has forecast 18 months of inflation below its goal as US tariffs dent confidence. Olli Rehn has been speaking to Bloomberg's Francine Lacroix.
We have to seriously look at the economic analysis at a time when we take decisions. And we have many challenges, many shocks currently. As I look at the landscape, we have geopolitical tensions, we have trade war, we have artificial intelligence that is changing the working life and industrial competitiveness. So all these factors play a role when we take decisions. And as I said, in the near term, risks to inflation are two-sided, and especially I would be quite concerned. I'm quite concerned about inflation being below target for an extended period of time. We have to stay vigilant, and we have to be alert and act with agility as needed and if needed.
Governor, do you share the concerns of the ECB Vice President that euro at 120 could be problematic?
Well, we are following closely the developments in the exchange rate, but the exchange rate is not a policy target for us. Our mandate is price stability, and we look at the exchange rate from that angle, how it affects our growth and inflation outlook, how it affects the strength of monetary policy transmission. And in fact, you can see different factors at play in this regard. I mean, the appreciation of the euro is affecting, if it is persistent, it is affecting cost competitiveness of European export industries. On the other hand, the recent international capital movements have reduced the term premia, and that has eased financial conditions while the other factors have tightened them. So in that sense, this is an empirical question, and we have to look at that once we take decisions.
But could you say that the euro has been of help to getting to the 2% inflation target, and now it could become a problem?
Well, that may be a bit simplified. That's your job, of course. But I would say that the appreciation of the euro has indeed helped us reaching the 2% target for now. Let's see if the exchange rate developments become more persistent or how they evolve, and we are monitoring that in light of and from the standpoint of our price stability mandate.
So that was the ECB's Olli Rehn speaking to Bloomberg's Francine Lacroix, looking at euro-dollar currently at a 117 handle. Now, the finance industry may be dominated by men, but more women are rising to the top. In the latest episode of Bullish, Sonali Basak speaks to some of the women of Wall Street about how they broke through and what's changing.
Citigroup at this juncture moves $4 trillion a day. $5 trillion. That's larger than...
We're growing.
It's larger than the GDP of France.
Yes.
That you move daily. What kind of weight do you feel on your shoulders in the morning?
I think the same as any CEO. You have to wake up every morning somewhat paranoid, feeling that urgency, a bit of excitement about what you need to do, but I think a healthy amount of pressure.
I feel like I've really tried, and as long as I've known you, to not ask you about what it's like to be a woman. I've very intentionally tried to not make that a part of the conversation, but I feel like it's now come the time to ask. Why is this something that is not addressed more loudly in this industry, that there's only one woman to lead a major U.S. bank?
It is a little surprising. I think there is a good generation coming through of really super talented women. But we've also got to recognize that there are some biases in the system, unconscious or conscious, and it's important that there's more of us that are breaking through and getting this into being business as usual rather than business unusual.
Does it ever feel frustrating to you to have to be vocal about the issue or to be the face of the issue? No one ever asked David Solomon about what it's like to be a man.
It gets frustrating when someone asks you about certain questions they wouldn't ask a guy. But for us, it's about how do we try and provide opportunities for everybody along the way, make it a win-win, because I think we're dead in the water if it's a zero-sum game. If we weren't competing for the best female talent, I would be cutting the bank off from 50% of the workforce and really putting us at a competitive disadvantage. Diversity is harder work, but it more than pays for itself. My frustration is when people don't believe in the business case because it's so blindingly obvious to me.
And you can see more from Jane Fraser in Bullish with Sonali Basak. That airs at 9 a.m. on Tuesdays on Bloomberg.com and YouTube, and 1 p.m. London time on Bloomberg Television. Coming up on the programme, taking stock. As we pass 2025's midway point, we're going to look ahead to the second half and why it's peppered with downside risks. That's next. This is Bloomberg.
It's Jobs Day, and Bloomberg has the report under surveillance.
There is this feeling that the labor market is contracting.
There's some risk that layoffs are growing.
Medium-term outlook is the economy should be fine.
Today, Jonathan, Lisa, Anne-Marie, and Mike will bring you crucial data and expert analysis at terminal speed.
The weakening trend continues.
This is a trend. We're seeing declines.
If you're not with a job right now, it's harder to find a new one.
The June jobs report, today on Bloomberg.
Welcome back to Bloomberg Daybreak Europe. I'm Lizzie Burden. Now, after a highly volatile first 6 months of the year, stocks are on course for a rocky second half, replete with downside risk. As excess liquidity wanes, the likelihood of recession picks up, and valuations remain near extremes. With me now for more is Farah El-Bahrawi, who leads Bloomberg's coverage of EMEA equity markets. Really good to have you with me, Farah. Let's just look through these risks and start with trade. Because we don't really expect to have a repeat of Liberation Day, and so I'm wondering how big of a risk the trade it is to trade in stocks at the moment. We'll just come back to you in a moment, but we're going to just get through some top stories first, if you don't mind, as we're just having little technical problems. So let's just go to some top stories next here on the programme. So let's go to tech. The software company Datadog will join the S&P 500 next week, replacing Juniper Networks after its recent acquisition by Hewlett-Packard Enterprise. Datadog shares soared in after-hours trading on the news. In May, the company reported first-quarter earnings that beat estimates and raised the full-year forecast. It will officially be added to the S&P before trading on July the 9th. Microsoft is also cutting about 9,000 workers in its second major wave of layoffs this year as it looks to rein in costs while ramping up AI spending. The company says that less than 4% of the total workforce is affected by cuts that are meant to streamline processes and managing layers. Microsoft also cut 6,000 workers in May, focusing on product and engineering positions. Also on the jobs front, TikTok is cutting more workers from its US e-commerce unit in a third round of layoffs there since April. A company spokesperson says that a difficult decision was made to adjust parts of the team, but didn't reveal exactly how many jobs were cut. TikTok Shop already reduced headcount in April and May after falling short of internal sales targets. Now, let's get back to the stock story, shall we? Farah El-Bahrawi joins me now, and we are sorted on the technical front, I'm pleased to say. So, look, we're not expecting a repeat of Liberation Day, but how much of a risk is trade to stocks in the second half?
It's still a pretty big risk for the second half, Lizzie. So we spoke to some of the world's largest asset managers, and they've listed a few risks, and top of mind is trade. So the July 9 deadline is really in focus, and what's really interesting here is that the market is not really pricing it as a big risk, or rather looking at it even as a more of a non-event. So yeah, that's the thing. You look at options pricing and it's rather benign around that date. So you have some strategists like those at JP Morgan, even at Barclays, saying that you can use the option space to bet on a bit more volatility coming through next week. But also the jobs report. A lot of investors are not really expecting the market to move much. JP Morgan sees that the S&P 500 will actually gain in most scenarios, but any negative surprise there could really see a sell-off in the S&P, especially now trading at a record. So we'll watch that, especially with valuations relatively high.
Well, yeah, they're the negative surprises, but what about upside surprises? The optimist at V asks, not just from trade, but from tax cuts as well, as we look at earnings season.
Right. So that could be a theme, but until we get a little bit more clarity, it's still rather on tariffs. So you look at Goldman Sachs's David Kostin. He said that margins will really be in focus this quarter as we start to see the impact of tariffs starting to show in the second quarter. There will be, or at least analysts expect, a sequential growth in the second quarter. But overall, what's more important is the outlook. What are companies doing with the tariffs? Are they passing them on to consumers? Are they absorbing it? That's going to be in focus. But also in Europe, consensus is expecting a 20% tariff rate on the region. So if we get any negative surprise on that, market pricing looks a little bit optimistic according to Citigroup. So overall, things are in place for the market to continue rallying if nothing goes off track. But if it does, then that's something to keep in mind. But for now, positioning isn't super heavy, so that really cushions it. And July tends to be a really good month for the S&P 500.
Okay. And then what about the valuation gap between the US and Europe? Do we see that narrowing over the next 6 months?
Well, we did a pretty big story on Europe earlier this week. It's been an incredible half for Europe, especially versus the US, and you have the Stock 600 outperforming it the most on record for a half, a semi-annual performance. But the investors that we spoke to for that story, they say that if we have profit growth coming in at the same rate next year, or at least similar rate compared to the US, which is what's expected as of now, then you could see a little bit of that valuation gap starting to close. Are we going to see them trade on par? Probably not anytime soon, but a little bit of a catch-up from Europe on that front is potentially on the cards. Again, this is if things don't really go off track on the tariff front. That's
we can live in hope, can't we? It's been great coverage. Thank you so much, Farah El-Bahrawi, Bloomberg's team leader for EMEA equity markets. We've got plenty more on the show. Stay with us. This is Bloomberg. Welcome back to Bloomberg Daybreak Europe. I'm Lizzie Burden. Now, I just want to take you through what happened yesterday in the UK gilt market as a result of the Prime Minister's failure to initially, at least, give a full-throated backing to his Chancellor, Rachel Reeves. It prompted this sell-off that started in long-end gilt yields, but then shifted over to Treasuries and German and Canadian bonds as well, and to UK stocks and sterling too. Now, it started with this Prime Minister's questions. Then you saw Reeves crying behind him and the Treasury saying, notably, that these tears were connected to a personal matter. But it has to be said the sell-off only deepened when eventually Starmer's office reaffirmed his backing later. Now, the worry for traders is that any potential replacement for Reeves would loosen her fiscal rules and borrow more. And these questions really have gained momentum in the past week because the Prime Minister, of course, was forced into this humiliating, costly U-turn on his flagship welfare reforms. It means tax rises are more likely in the autumn, and you can see here the market reaction, the rise in the 10-year yield there, the gilt moves, as I say, going global. But for context, this is nothing like the Liz Truss episode in 2022. You can see that on the left, what happened yesterday on the right, but it does show that this market the UK, I should say, still lives at the mercy of the bond market. And the irony of all of this drama is that it may have made Reeves's fiscal woes even worse. That yield spike eating into her headroom and making those tax rises even more likely. Terminal users can find all of these charts and more that we use throughout the show by going to GTV Go on your terminal. But that does it for Daybreak Europe. The opening trade is up next. Anna, Critty and Guy will take you all the way to the market opened. This is Bloomberg.